All right, classic, right? Now, my next guest just took profits on small and large cap value into strength, and he's buying the Lag 7. Let's bring in our portfolio wealth advisor, CIO Lee Munson. Lee, great to see you in studio, my man. It's been, what, a long time.
Too long.
Too long. You know, I want to read a quote from Ken Griffin. So there's a real great video out there, folks. If you can get it, Google it. And he talks about 2007, a major deal they had to put together over the weekend. And essentially he said, great things may come to those who wait, but only the things left by those who hustle. He attributed to Lincoln. I went down a rabbit hole. I couldn't find that. But the bottom line, though, is opportunities are out there sometime. And, you know, you got to be patient. But also the other side of this, those who hustle, they can move in haste to it sometimes. Yeah.
So I think what's really happened is that we're suffering from the leverage. We're going to have, like you said, a lot of people who are going to be shocked by another 2 or 3 hedge funds that are going to blow up. I think you can probably see NASDAQ go lower, but I decided yesterday, let's be realistic. I've made too much money in value. You're looking at banks like Bank of New York trading at like 2.5 times book. JP Morgan, historically, you know, their price to book, it's ridiculous. And so what I'm looking right now is I want that long duration play. I love the things like Amazon. I love the things like Microsoft. I mean,
well, let's talk about Microsoft, because that move yesterday in Microsoft, from a point perspective, I mean, 17% on a $1 trillion company, that's huge. That's one of the biggest point gains we've ever seen.
Yes.
These are the earnings. What is it about Microsoft here, though? Because you'd say right now in your mind is like the clear winner, the clearest winner.
The clearest winner. So number one, their operating margins went up dramatically. That means they're efficient. And then their raw profit margins went up too. So here's what it signals to investors. Number one, we all knew if Microsoft can't make money on this big investment in AI, we have big problems, bigger than anything else. Microsoft came back and said, not only are we more efficient, not only are we making more money, our raw profits are going up, so don't worry about what we're going to be investing over the next year or two. I mean, what a sign of relief.
But they were able to convince Wall Street, whereas Google couldn't, which is intriguing to me.
Well, you know, I think Google it's the whipping boy. Google is always sort of the B player. Google's always the thing that never quite executes good enough. But also, let's remember, Google's doubled its market cap recently where Microsoft has sold off. I mean, there was a time earlier this year, it was down, Microsoft is 35% from last October. I think what it's really about is Microsoft's a catch-up trade, and Google is the already made you money, why not take some profits off and move it around? I think people are selling their Google to buy Microsoft. It's a rotation.
You like Amazon as well. Amazon acting really great, so it's sort of similar situation. I want to fast forward though to the future, because in your notes you talked about edge computing. I love that. You know, I like where we're going, humanoid robots, the physical AI, and all this stuff. Walk the audience, explain to them what it is, you know, and why and who is going to benefit the most.
Okay, so the first thing is the whole idea about edge computing is taking AI off the cloud and onto the devices in our hand. Also automotive, also robots, also what we call, remember the Internet of Things we used to talk about?
IoT.
IoT, it's back. So Qualcomm, number one place, they got a little product called their Snapdragon platform is already being used in these things. Number two, you've got Apple. Apple's got the hardware, has all, you know, hundreds of millions of affluent people across the planet. They have all our data. They know everything about us. Those little phones, they're going to start getting that data on the phone versus going up and down, spending all that juice, spending all that expense. ARM, I think it's more of a secondary player, but ARM has that architecture, that intellectual property to make edge computing work and get everything on that little chip.
So it's interesting. I was reading your note. You'd think it's 1998, or, you know, if we were to go back. So yesterday I kept talking about long-term capital management. It kind of reminds me of this kid, right? Brilliant folks. They won Nobel Prizes. People gave them a lot of money to manage, and they blew it up. Ironically, it was right here at the same point. By the way, the NASDAQ dropped 30%, folks, 30%. And if you gave up then, you missed the next move, which was a 300% move. So it may be a couple of years, but this could be still a big ride to the upside, no?
It is. And remember, what was happening in 1998? We had long-term capital management. And also remember we had the Russian bond default. And everybody's worried, are the banks, you know, does your bank have Russian bonds hiding in it? Today, the little Russian red scare is inflation. So what the Fed did in 98, they lowered rates to try to shore things up. It created all this leverage. I think what we're going to see today, same idea, different trade, where we want to see the Fed raise rates to kill inflation. And if we can do that, investors are going to feel so much better about the prospects of AI, and you're going to have same things. So just remember, just because the trades were opposite in 1998 doesn't mean we won't have something like this. I think the AI trade is taking a breather now, but I think we're going to have one more leap forward.
Right.
But again, it's not about rates going down.
Right.
It's about killing inflation, just like it was about shoring up confidence in banks in 98.
So I guess the moral of the story is that, be prepared for more weakness, more bouts of weakness, but don't give up on the overall rally.
No.
That would be a huge mistake.
No, right now I'm just in phase one of 2 or 3 buy spendings. I want to see, we see the box of the S&P.
Right.
I did some buying yesterday, but if we get more weakness, if we hear more, some hedge fund blew up, I want to be a buyer and back it up. And I'm going to sell my value, which I love my value stocks, but I'm going to sell that. You want to, fade this, the banks, get into the AI.
Great stuff, Lee. Really appreciate it. Have a great weekend, my friend.
You too.